Market slips from day's high but holds on to the steady gains as hope builds that the Prime Minister may announce more steps to revive demand in his Independence Day speech. Pharma stocks lead the gains, with capital goods and realty stocks also adding some green. Auto and financial stocks underperform.
Shares of Eicher Motors and Hero MotoCorp see profit taking off their recent run-up following weak Q1 performances. Tata Steel, however, trades higher with good gains despite losses far exceeding street expectations. Rising demand for and prices of steel help provide a floor.
The Supreme Court will hear the high-profile telecom dues case later today. Under discussion is also whether banks have higher claim than the government to revenue from sale of spectrum by bankrupt telecom companies.
Bond prices and bank stocks fall as a higher-than-expected consumer price inflation at 6.9% reduces hopes of further rate cuts, at least in the near term.
Hello and welcome. We are in a very patriotic mood today. I'm Nisha Podar and with me is Sumaira Abdi. Sumaira, hi. Good afternoon. So looking at the markets right now, steady gains at the moment when we take a look at Nifty 50, still holding above that 11,300 levels off the low point of the day as far as Sensex is concerned. Over 100 points gain at the moment. It's the mid caps which are performing better than the frontline indices today. And on the other hand, the bank Nifty is the one which is a slight bit of a drag. As far as the advanced decline ratio is concerned, because of the mid-cap participation, the broader markets are really participating and therefore more dependent on the advanced side. As far as the overall sectors are concerned, metals are performing well today, Sumaira.
All right, so let's get started with that and move on to some stock-specific action. And on the top stocks that are making news today from the auto pack, of course, some result reactions in the form of Eicher Motors, Hero MotoCorp, both stocks under pressure. And Rima is here to tell us how the numbers looked and what was it that led for the weakness. Rima.
Thanks so much for that. Let me start with Eicher Motors, where Q1 was weak. The company's reported a loss of 55 crores at the bottom line. The gross margin shrunk 560 basis points on a quarter-on-quarter basis. The commentary was upbeat. The management did indicate that inquiries are higher than pre-COVID levels. The bookings are pretty much back to what they were prior to this crisis. But the street is a bit concerned about valuations. As CLSA points out, the valuations of Eicher Motors is at an 80% premium to peers like Hero MotoCorp and Bajaj Auto, which is untenable at a time when its operating metrics are deteriorating. So that's the reason why the street is a bit disappointed. On Hero MotoCorp, it was a weak quarter, but not as bad as what the street was anticipating. So operating margins at 3.6% is better than the 2.4% that the street was anticipating. And even in the management conference call, some of the statements were optimistic. So the management said that the EBITDA would have actually been 12% if you add back all the COVID-related and lockdown-related costs. They're sitting on cash flows of 1,000 crore in Q1, so their balance sheet is strong. They're gaining market share. They've gained 500 basis points of market share in the domestic market in Q1. Their supply chain capability is back to 80 to 90% of pre-COVID levels, and they are planning a completely premium portfolio and some new offerings. So the street is something to look forward to, which is why when the conference call was taking place, you could see that intraday recovery in the Hero Motors stock. Back to you.
All right. Thanks so much, Rima, for getting us all the details from the auto pack. But take a look at the numbers really flashing on your screens, and that has turned the stock into the positive territory as well. In fact, the street is reacting well to Ramco Cement's numbers, where EBITDA margins as well as the revenues has seen some outperformance, and it is in line as far as the net profit figure is concerned. In fact, Nigel is here to give us the key takeaways and first reactions on these numbers. Nigel.
Well, it's looking quite good actually, Nisha. The problem for Ramco Cement and the reason why the stock is not moving higher is because it's already had a bit of a run in the last couple of weeks anticipating these numbers. The results initially were scheduled for last week, but it was postponed to this week. So the street was already baking in good numbers out there. What's worked for them? It appears that realizations have worked for them because on the top line, there's a degrowth of close to around 25%. It's beat our estimates by close to around 40 crores. So that's a positive in itself. So that's point number one. The second factor is when you have the top line degrowing by around 25%, but you have your power and fuel cost that is down by close to around 44%. So they have got benefit of lower power and fuel costs, and that explains why the margins have come in closer to around 25%. We were working with a number of around 23.5% odd. So Ramco Cement, yes, the numbers beat our expectations. Margins are much better. The reason that the stock is struggling to move higher is in fact valuation-wise, it's not very, very cheap, and they have expansions as well that are coming on stream. So that's about Ramco Cement.
All right, Nigel, thanks very much for that. Volta's numbers coming through as well. So on the revenue front, it's actually a little better than what we were expecting, right? So almost 1,300 crores in terms of consolidated revenue. That beats the poll by close to about 300 odd crores. In terms of net profit as well, it looks like a very, very good number. So 82 crores compares with under 15 crores in terms of what the expectations were. The stock is now shooting up to the high point of the day. And, you know, the expectations were muted. But then, like a lot of people said that you know, the replacement demand is very high given that there was a lot of work from home, etc. going on. So perhaps that is what has led to this big bump up that we're seeing in the earnings this time around. We'll have Mangalam joining in just a bit to analyze those numbers in greater detail. But for now, it looks like a very, very good stealth. Nigel, you were waiting by for Tata Steel. How were the numbers?
Well, the stock price is telling you that in fact, you know, the street has liked the commentary that they've got in Tata Steel's, you know, con call itself. So let's run you through some of the details out there. In June, they say that in fact they function at more than 100%, 110, 115% approximately. So domestic demand is looking quite good. They also say demand supply balance is very good in the domestic market. Besides that, one was worried whether or not inventory buildup is there, but they're saying they're not facing any problems in terms of inventory. And finally, they say with regard to the India business, price hikes to the tune of around 2,500 to 3,000 rupees per ton. That's on a sequential basis. So that flows, most of it will flow to the EBITDA number, and Q2 will look far better. Moving to the European business, it continues to struggle. They have attributed product mix as to one of the reasons why European business struggled. And more importantly, Europe delivered a negative EBITDA number of close to around $40 per ton. The problem is that this number includes some sale of carbon credits to the tune of around 78 million pounds. So stripped of that, Europe would be far worse. The good part is they say the globe is recovering and China is seeing a V-shaped recovery, which is positive from a Ferris point of view. Finally, in terms of the balance sheet as well as the cash flows, they say that they're focusing on cash flows. Yes, Q1 was weak, but they managed to generate positive cash flows out there. So that's positive. The capex in the first half of the year was around 1,850 crores odd, and they'll revisit the capex for the second part of the year. You don't want them to spend too much, concentrate on deleveraging the balance sheet and concentrate on the operations. And it seems on that parameters, you know, most of those parameters, you get a tick mark. Europe struggles. India does well, the street likes it.
Right, and also Nigel, Hindalco is supposed to come out with its results very soon. And very quickly, what are we really expecting? Of course, the overseas operations results are already out. We are now focusing on the India business.
Well, that's right. We told you yesterday that in fact Hindalco will react positively to its Novelis and Aleris' numbers, and the stock had seen a big rally. Now we're focusing on the smaller part of the business. That's the domestic part of the business, and it's expected to be weakish. Let's run you through the expectations then. The revenue that will decline by close to around 24%, but the operating profit will not decline as much. It should see a decline of only around 3%. That would mean that margins will improve. What are the key numbers you're looking at? Remember, for Hindalco, you have the standalone business, that's the aluminum and copper business, and besides that, you have the Utkal Alumina business. So between all these three units together, the total EBITDA number, that's different from the standalone EBITDA number, we are working with around 860 crores approximately. The aluminum business, that's a total aluminum business, we are working with a number of around 740 crores, while for the copper business, it's likely to struggle. It should come in at around 110, 115 crores approximately. These are the top numbers you should be looking at. We know for the aluminum business, volumes are likely to come in low, should see a degrowth of around 5%. LME prices have been weak. What benefits them though is that input costs have cooled down, and they've also hedged some part of their sales at a higher price. So that's good news. Copper business struggles because volumes are likely to see a degrowth of close to around 45%. And besides that, the TCRC margins are likely to get compressed. So copper will be weak. Aluminum will be reasonably better. We'll wait for the management commentary as well. Back to you guys.
All right, Nigel, thanks very much for that. And with that, we move forward now to a CNBC TV 18 special offering. My colleague Sonal Butra tells us which is that one sector that has weathered the COVID storm in the recent days. Sonal.
While COVID has impacted consumption in most sectors, some who have actually benefited in this crisis. There are many industries that benefit from their exposure to pharma and agrochemical sectors. One of them is amines. Well, amines are a class of solvents used to manufacture a variety of products, from the tablet you consume to the paints on your walls and the color on your clothes. Amines are made using crude derivatives like methanol, which is imported from Iran. We all know how crude prices have trended down, and methanol prices too are at record lows right now, $150 to $160 per ton. The domestic market for amines is at about 1,200 crore rupees, quite small. Even globally, the amines industry is just $4.1 billion in size, or just 0.1% of the total chemical industry. The producers are Eastman Chemical and BASF. And since amines are rated a hazardous material, it is difficult to transport, and hence the industry in India also is oligopolistic, with just 2 to 3 producers catering to the majority of demand. The industry is made up of just 3 players: Alkyl Amines, Balaji Amines and RCF, and this is how their capacities stack up. Let's also talk about how the revenues really are. For RCF, it's a small amount, just 2% of their revenues. But let's move forward. Well, amines are of 2 kinds, methylamines and ethylamines, and each of them has 3 variations: mono, di and tri. And further solvents can be derived from these. The demand for these chemicals is seeing an upswing. Let's take the example of DMF here. This amine is used in every drug that you and I consume. During COVID, there was a 30% increase in DMF prices due to higher consumption. However, 67% of the total requirement is imported due to cheaper imports from China and Saudi Arabia, and hence there is an opportunity of import substitution here. DMAC, there is another amine which is used in manufacturing of APIs, and this has seen an increase of around 20% in consumption. India does have a capacity of 84,000 tons of methylamines, 36,000 tons for ethylamines. However, there is still high dependence on imports for amines. China is still the largest consumer, and it is around 60% of the global production. Additionally, important to note that India is self-sufficient in methylamines, as there are 0 imports, and also the pricing is cheapest in the world. However, for ethylamines, there are still large quantities imported by the country, and there is an opportunity for import substitution here as well. Companies are planning on setting up more capacities in ethylamines. So makers of amines are riding high on 2 tailwinds: higher output prices and lower input costs that gives them an opportunity for Atmanirbharta.
All right, trend spotting by Sonal Bhutra in the chemical space, which, remember, is gaining traction in pandemic situation. With that, we'll slip into a short breather on Business Lunch, but also don't lose sight of the coronavirus numbers. In fact, we'll leave you with a snapshot of India's coronavirus numbers so far. Take a look and we'll be back soon.